Good morning and welcome to Franca Tiano of Bullivant, Tiano and Associates. She's in Plymouth, Michigan, and this video is part of our Journey to Icon training for the month of April. And Franca, why don't you tell us a little bit about yourself, your awesome partner, Ted, and your firm?
Hi, my name is Franca Tiano. My business partner, Ted Bullivant. We have a CPA firm, Bullivant, Tiano and Associates in Plymouth, off M14 in Sheldon. And we specialize in a lot of construction and real estate clients specifically, but we do a wide range of clientele and ranging from doctors and attorneys to obviously real estate brokers and investors and rental properties as well. So we kind of have a wide range of clientele in that industry. And we do pride ourselves on planning and advising our clients to kind of assist them through the setting up new businesses, as well as, being unfamiliar with certain rules and tax laws. We prepare financial statements as well as necessary, and help with bank financing and pretty much a wide range of spectrum of services here. We try to act like consultants for our clients, and we try to advise them to keep away from the hazards of tax issues and also, again, planning. To us, planning is a big part of what we do. With the new administration, there's going to be a lot of, we've been doing a lot of that, obviously, right now. Things have been changing almost weekly, as pretty much everybody knows if you watch the news. So it's kind of an unprecedented time right now for us and for a lot of businesses. So we're trying to we try to stay abreast on all the current administration laws and PPP loans and all these other new things that have come about in the last year, really. I've been practicing CPA for about 25 years. Ted's my senior, so he's been doing it for a lot longer. We are always welcome to assist in any client needs. So if it's something that you think that you may need some assistance on, we can always share that my contact information as well.
Oh, I will. I'll put that at the end of this video. And you've always done right by us. I will tell you, Lou and I wish we had known you 25 years ago or even longer ago than that, because there were a lot of mistakes made in our accounting over the years before we met you guys, and your focus on realtors and construction and all that has helped us so much. So we sure appreciate you, and we're sharing you with all of our agents today. So
wonderful.
I think it goes without saying that, often people get into real estate and they focus on generating leads and closing sales. Those are the big two things they're focused on. And
Sure.
Running a successful business, perhaps, goes by the wayside, and the focus on using tools and systems somehow isn't at the forefront in realtors' minds, and it should be. Bookkeeping and tax planning should be first on the list in running a self-sustaining and successful business. I think you'd agree. So let's
Sure.
talk about the income, the deductions, maybe tax liabilities that give even our newer or our experienced realtors a little introduction to how should you be tracking your commission checks and paying your bills, and what kind of receipts are you turning in at the end of the year, or better yet, quarterly? So give us your point of view.
Sure. Well, most realtors, as you know, are generally receiving 1099s and their commission checks at the end of the year. So, commissions are usually pretty straightforward. You'll get a 1099 at the end of the year reporting your commissions. But in my opinion, everybody makes mistakes. So as a realtor, I think that first and foremost, I would try to set up some type of a system. And if you're computer literate, honestly, QuickBooks is probably the easiest and most efficient program that I would recommend. But I always, again, I look at the person, and if some people are more limited on their computer skills, then maybe I might help set up a template type situation. But honestly, QuickBooks would be the best and easiest avenue. And if it's at all possible, what's really a great idea is to set up a separate bank account to track your revenues and expenses. And of course, whenever you need money throughout the year, you would just write yourself a check from that account periodically to pay your personal expenses and so forth. That's an easy way to keep track of those items separately, and not have to be scrambling at the end of the year, because you can always go through a check register that was specifically for that account, and not commingle it with your personal expenses. I think that's the biggest
Yeah.
that's the biggest trick for realtors, because at the end of the year, they're like, I don't know. I don't know. I probably spent this much on this and this much on that. So, I think those two are probably, to me, the biggest and easiest ways to track separately. Now, if you're new to this, I definitely would go to an IRS website and pull up a Schedule C to get an idea of the types of income and listing of expenses. That's kind of a nice little summary. I mean, that's our tax reporting of your income generally. Okay. And it kind of is a nice idea because it labels out all the different types of expenses and categories you can have: office expense, auto, and we can talk about auto in a minute.
Where would they go to get this list?
The IRS website, irs.gov.
Okay.
Yeah, and you can look up just look up a Schedule C,
Okay.
under forms.
Okay.
And yeah, and that's kind of a nice little template to use.
Okay.
But when it comes to certain things like auto expenses and so forth, technically, and this is another area that realtors tend to um, not necessarily keep track of, is mileage, right? And business mileage. But
They still need that
IRS
mileage log? Is that still required?
Yes, you're technically, yes.
Okay.
Yes, you are. Now many people, don't do that. But if you were under audit, it would be requested of you. So a mileage log is a good idea. Um, Generally speaking, when it comes to automobiles, you have two different avenues that you can go. You can either take a mileage, or you can um, actually use actual expenses, which would be your gas, your repairs and maintenance on your vehicle, and all those kind of costs. Generally speaking, the mileage rate tends to be more than the cost, but again, because the mileage rate is 56 cents a mile currently. So, but those are other areas that I think realtors kind of maybe neglect a little. And I think that some attention needs to be spent on that. And as far as taxes go, one of the biggest pitfalls, I would say, of being a self-employed individual is the fact that we have not only federal income tax and state income tax to pay, but we have this other thing called Social Security. And as you know, if you work for an employer, you would normally get a W-2, and you would have withholding for your portion of the Social Security on your check, and then the employer would be paying the other half of that. But when you're self-employed, you're responsible for both of those. So that adds up. That can become very costly. That's 15.3% of your income, of your net income. Okay. In addition to whatever federal tax bracket you're in, plus your state of 4.25. So if you did the math realistically, let's just say you are in the highest tax bracket, you're talking about 37% plus 15.3% plus another 4% for state. That's a lot of money. It's in excess of 50% of your income. So and again, one of the things that we like to do here is, and it's something that you should think about as well, is evaluate your needs. If you are up in those upper tax brackets, that's when you really need to talk to your tax advisor and say, listen, this is a lot of taxes. Is there a way that I can minimize it? And, you know, a couple ways, obviously, is profit sharing. Setting up SEP IRAs are a good way of doing that. That's a way of being able to sock away, you know, 25% of your net profit into a profit sharing plan and deferring some of that tax liability, right? In addition to that, I've done this for many individuals as well, is setting up an S corporation. Um, and by doing so, paying a payroll out of that S corporation to you as an individual, and kind of controlling how much we're paying in Social Security and Medicare tax. These are some tax strategies that, you know, again, it's a cost benefit type of situation. So you have to kind of see where you're at on the tax spectrum, and if it makes more sense to go that route, because there is a cost associated with that, right? You would have a
Sure.
separate tax return, payroll tax returns, payroll processing, that has a cost as well. But again, your tax advisor is who you need to go to and discuss those issues with, to better. I think that's where the biggest issue is I think that realtors nowadays they are so focused, like you said, on selling
Yeah,
and earning income, and they're not reaching out to their professionals themselves to get
exactly.
that kind of advice. And I think that is more warranted than it's not. These are some simple strategies that CPAs can advise,
Yeah.
to help, you know, move forward. So
Well, I think it's important that, realtors understand, oh, I've got this $5,000 commission check today. I'm going to go spend it.
right,
And
yes,
there's
well,
no planning. And maybe they need to be making quarterly payments. Maybe
right,
like we do, they need to check in with you quarterly,
right,
and plan, because the worst thing is to get caught on April 15th the
right,
next year and find out you have a huge liability and no way to
right,
pay it. And
correct.
now late fees and interest start racking up on your debt to the
And you
state
never get caught
IRS.
up, and you're always behind the eight ball. And definitely quarterly estimates, another topic I was going to discuss as
Mhm.
well. Most self-employed individuals, that is generally how they would pay their taxes, is on a quarterly basis. And you know, generally speaking, if somebody is a self-employed individual and a Schedule C like that, I immediately try to tell them, for example, take your commission check and take 30 to 40% of it and put it in a savings account. You know,
Yeah,
I mean, that's one way of handling it. And there's different, you know, again, it all depends on the person that you're dealing with and how they handle cash. I mean, but that is definitely, you do not want to be caught behind the eight ball in tax payments, because first of all, the penalties become astronomical, and
yep,
secondly, it is hard to get caught up, because when you're filing your, for example, we're filing tax returns currently, right? It's March of 2021. Our taxes are due in April, right? So if you're squaring up for 2020 on April 15th, and then I'm going to come and tell you, okay, you also have to make your first quarter of 2021. You're going to look at me like, what? I don't have the funds for all of that. So
right.
it is very important, as a realtor to be definitely saving, obviously saving a portion of your revenue for taxes, upcoming taxes. And again, strategizing, talking to your tax professional is important, because again, as I told you, I mean, there's other avenues of savings too, profit
Yeah,
sharings and so forth, that you may want to, even health savings accounts. There's a lot of other things,
yeah,
that health savings accounts are great to help you with your medical expenses, right?
right,
And making them not taxable, right? That's a
right.
huge thing, right? So
And let's talk
definitely
about that
that's
other
something.
passive income we at EXP Realty get. I mean, EXP, our agents know that they have great opportunity to start planning for retirement by earning up to $16,000 worth of free stock every year, in addition to revenue
Yeah,
share, which, depending on how many agents you attract to EXP, that could be a really nice source of passive income, but that's income,
right,
right? So
right.
agents earning
It's
revenue share
income.
have to plan for the tax liability on that revenue share.
Right, absolutely. So again, tracking your revenue share is tracking all your income. Number one is to confirm that it is accurate. I mean, because again, everybody makes mistakes. I mean, you can't just trust a tax document that you receive. You need to be
Right,
also keeping your own records, right?
right,
For sure. But absolutely, there's a tax liability with that as well. So you want to, again, do a little savings on that differential because it
right.
could be astronomical depending on how much your revenue share is for the year, right? It
Yeah,
definitely could creep up on you.
absolutely. Franca, I think what you offered today is really invaluable, and we know it's your busy time of year. And you mentioned there's a lot of other topics we could cover. Hopefully, things stay strong, and we're not back into PPP loans and all that kind of stuff later this year. But maybe after April 15th passes, and you take care of all the people who do extensions, and take a little time to decompress. Maybe in the sunshine, maybe you can come back and share some more information with us. And
Sure.
I'm going to put your contact information at the end of our video here. And
I appreciate it.
yeah, welcome people near or far, because everything can be done via your secure site for uploading documents, and
Correct.
via Zoom meetings and everything else. You don't need to be anywhere near Plymouth, Michigan to use your
Absolutely.
services.
That's correct. So if anybody needs to reach out for some more tax advice moving forward, even now, we're available. So feel free to contact us. And like Deb said, she will share our contact info, and we look forward to talking to you.
All right. Thanks again, Franca.
Absolutely. Thank you.
Thank you. Bye-bye.